All right. We are we are here. Figured out the Zoom backstage. Awesome. So hello everyone. Thank you for being with us. We will do quick intros. I'll intro myself in the slide deck. But I'm here with Andrew Carr, David Plon, and Kris Bennatti. Um, Ladies first. Kris, would you mind just giving a quick intro, and then we'll go around the horn so everyone kind of knows who they're speaking with?
Awesome. Hi, I'm Kris. I'm the co-founder and CEO of Hudson Labs. We do high precision AI for institutional investors. We've been around since 2019, focused on adapting LLMs to finance specific use cases.
Great.
Awesome. I'm David Plon. I'm co-founder and CEO of Buyside Analysts. We're an AI-powered research platform built to help investors with idea generation, context building, and thesis monitoring, particularly long, short, and long-only investors.
Great. And Andrew.
Good evening, everybody. I'm Andrew Carr. I'm an analyst instructor here at Fundamental Edge.
Sweet, short, and to the point. All right, let's go. So we are here today to talk about using and deploying AI for earnings season. I will warn you, I initially started out building a 30-slide deck for this webinar. It turned into 72 slides. So we'll probably go an hour and 15, and then Q&A. That's good news if you're really geeky about this stuff, because I think we'll cover a lot of ground here. Bad news if you're not that interested in AI for earnings. If you're not interested in AI for earnings, you should probably drop and go watch some Netflix or something. Quick background. I spent 13 years as an analyst and portfolio manager at 5 various hedge funds. Retired from managing money in 2021. And kind of accidentally became a workflow expert in this area in 2018 when I started working with a quantitative fund as a consultant, really feeding fundamental processes into machine learning algorithms. So that's sort of come full circle 7 years later, when the hottest thing in investment research is how to integrate AI into investment process. Really, the core of what Andrew and I do all day, every day is run the Analyst Academy, which is a 6-week, 60-hour program that really tools analysts up to answer this very simple, benign, but terrifying question of take a look at the stock and let me know what you think. We do that in a 6-week, 60-hour online cohort, speaking to mostly sort of early career investment research analysts. About a third of those cohorts are sponsored by their funds. We work with, on a direct basis, a handful of sort of well-known hedge funds, long-only funds, family offices, et cetera. So we've been running that for about 3 years with 1,200 students, and I think we've gotten pretty good at sort of decomposing investment process. This thing called AI popped up a few years ago. I didn't know the first thing about it when Kris Bennatti and team were building, finance LLMs back in 2019, but it's become a really sort of hot thing, obviously, in the last 9 months. And a question, now that people asking is maybe we should apply more AI to our investment process. I'm not the most technical person in the world, but I'm pretty good at workflows and pretty good at distilling things. So we put together a 6-month course of 1 month of live and five-month-long case studies with guest speakers and vendor trials to really explore this very simple question of maybe we should apply more AI to our investment process. With I think some of the question is it's not an obvious answer, right? Which we'll sort of explore a bit in this webinar as well. But we really plan to do that in depth over 6 months, digging into first principles of AI and investing, to prompting, to system design, process deconstruction, you crafting your workflows, and ultimately building your own custom AI system. Kris and David will join me and Andrew on that as co-instructors. There's certain areas Andrew and I know really well. There's certain areas that we haven't the first clue, and so we try to stay in our power lane and bring in experts across these sort of specialized areas when we do that. The sort of disclaimer in that sense, Fundamental Edge has no economic relationship with any of the vendors we'll talk about, including but not limited to AlphaSense, Portrait, and Hudson Labs, who we'll discuss today. We sort of bring Kris and David in because they're nerds like us that we really sort of spend, I say that very kindly, nerds like us spending their day going deep into these areas. And so we're joined by, I think, a masterclass of guest speakers, people from across the ecosystem, managers, consultants, engineers who are at sort of the leading edge of integrating these tools. So getting those complementary perspective, just explore AI deployment from all angles with sort of the humility that we are more seeking truth rather than have the answers. So that's sort of the requisite commercial for Analyst Academy for the AI Academy, which will start September 15th. You can find more info on our website. All right, so let's frame for a minute just AI at a high level. The AI hype machine is currently in full effect. I sort of have to get off Twitter these days because I wake up in the morning and I open my Twitter and the first thing I see is a tweet: "You have 18 months to escape the permanent underclass," and I get really nervous and I get really motivated. I'm like, "Oh crap! I got to go to work and escape the permanent underclass," whatever that means, or AGI is coming soon, or someone apparently saw consciousness in the server and or was off of his psychotic meds and needs to go back to see his therapist. AI will require renegotiation of social contract. 100 million jobs are at risk. A UBI. And so, you don't have to be living under a rock. You kind of have to be living under a rock not to have AI hype thrown in your face these days, despite the fact that AI is still failing at many tasks that a 4-year-old can complete. It still can't quite count the number of bees in a blueberry. It still fails the sort of test I ripped from someone else on Twitter, which I, again, sort of ran today, of how many fingers are on the 6-finger hand. I said 5. And the funny one I've seen on TikTok lately is asking ChatGPT to count down from 100 to 1. Just try that on the voice motion and ChatGPT. ChatGPT is really lazy and it's kind of mean if you push it on that. So there's sort of some weird quirks of AI. I try to point out to people that AI hype is actually a very rational exercise. I kind of call it the Elon Musk reflexivity gambit. Let's say for example that I have a business idea. I need to raise $100 billion to get that business to scale. I kind of need to convince investors that business can be worth $500 billion to $2 trillion at maturity. Well, that's a lot. That's sort of one of the biggest, most valuable businesses in the world. Saying I have this really cool word calculator probably isn't inspiring enough to raise that sort of capital, but something like AGI and superintelligence probably is. And the VCs, consultants, and media kind of all feed into the collective delusion of the moment. So I cut the person's face out of this because I didn't want to be sued for defamation, but you can sort of imagine who might have been here. Please, bro, we're so close to AGI, just 20 billion more dollars. I sort of know the lessons from history is that the gambit works sometimes like it did at Tesla, but it usually works for the second or third owner driving that consumer surplus like it did in the telecom bust of the 90s. AI hype also isn't a new phenomenon. So when you hear these very confident sounding statements that machines will be capable within 20 years of doing any work that a man can do, that sounds like a current statement that was actually made in 1962 by Herbert Simon, a future Nobel laureate. I really enjoyed this book by Artificial Intelligence, A Guide for Thinking Humans. It kind of walks through the history of the AI hype cycle from spring to winter. And a lot of what we're faced with right now is nothing new in direction. So I will remind you that many of these sort of hype artists are the same people who convinced us it was smart to pay $1.7 million for a digital rock. And so do your own due diligence, think for yourself in sort of all things. So that's I ran this through with Kris earlier, and she's like, "That sounds pretty negative." I think that's sort of like objective. Maybe I'm sort of too skeptical by nature. But let's get into what my observations are. I really like Andrej Karpathy. I think he's sort of one of the voices that I've grown to trust and all of this. And he said the LLMs are obviously magical and amazing in some respect. It's really good at some things, not so good at others. And there's a lot of sharp edges to be aware of. That seems like a really balanced statement for which I agree. I read about this paradox on Twitter a few months ago, and I've been thinking about it a lot. It's called the Moravec's paradox, which is basically the paradox, the counterintuitive observation that certain tasks are easy for humans are hard for computers, while tasks that are difficult for humans are often easy for computers. Things like math are easier for computers. Things like gardening, going out and pulling flowers, are obviously incredibly difficult for computers. And so I've been thinking a lot about this in the investment research context, and I think the Moravec's paradox holds true. People talk about, hey, these tools are like an intern in your pocket, and I actually think that's inaccurate. The simple investment research motions that I would give an intern, things like update this model, or simple question, how much market cap has NVIDIA created since the 3.5 reveal, or hey, create a nice summary of what happened in this investment conference this week, or how will this contract loss impact XYZ's EPS? Those motions tend to fall flat. The typical task that I would give an intern. Simple things that I ran today of, hey, calculate NVIDIA's market cap change since GPT. Virtually all of the open access general purpose models failed at that very simple task, with sort of stupid mistakes like wrong dates, wrong share count, and referencing some random blog that said this is NVIDIA's market cap. There was just some rounded number. And so I think that's important to know as we start thinking about deploying these tools. I like this quote from an investor letter that the most effective ways to use AI are often non-obvious. They come in some of these more complicated investment research motions, actually, in my experience, tasks that require more experience. And we're seeing this a bit. A big piece of news this last week in AI is this MIT study found that 95% of AI pilots are failing, and what they're seeing in that sort of experience, if you go into the report, is that on the quick tasks like emails, summaries, basic analyses, people are trusting AI and preferring AI, right? I've been writing emails to hotels when I stay there of like, hey, sort of fishing for an upgrade. It's fantastic. It's a very high hit rate if you do that. And I don't have to write a 3-paragraph flattering email. I can just ask Claude to do that. But for complex projects, multi-week work, client management, it's almost getting no adoption. And so this sort of idea of agentic AI, is that just sort of simply compounding some silly mistakes? And I think agentic AI, to me, I still can't figure out what agentic AI. It doesn't make any sense to me. Maybe Kris and David can explain that to me. A base case that makes sense to me is the asymptote argument, the argument that, like search engines and the internet, LLMs are a highly useful tool. They're a highly useful tool today, and I'll show you a few of those workflows. But they won't exponentially improve forever. Right? There's now this sort of exponential scaling hypothesis. I can't sort of wrap my brain around it. And that's fine. Right? My argument is that's fine. My argument is they want us to believe it's super intelligence in the sky, consciousness in the server, and in 5 years you won't need a job. As I've sort of integrated these tools, my observation is LLMs sit together with the internet and cloud computing and PC and spreadsheets and search engines as another great innovation in the way we do our work. And that's great. Right? I don't know. I'm open to being wrong in that statement. Is that all negative? Obviously, no. The base case is compelling, like innovations that have come before LLMs that have given us the ability to automate previously manual processes and deepen the velocity and quality of our analytical insights, like spreadsheets and alt data. I couldn't imagine doing my job without a spreadsheet. So across idea generation, idea diligence, and maintenance. So that's the sort of, my high level sort of framing, how I'm thinking about, seeing through the fog, seeing through the BS. Let's get into a little bit of sort of system design, how we're kind of thinking about framing the implementation of these tools. And I think it's sort of 3 buckets. One is tool selection, really being thoughtful about, people say, are you using AI in your investment process? Well, it depends on what AI, it depends on all sorts of questions. What tool, what part of the process? And to me, there's sort of 3 big levels. There's using a general purpose model, a GPM. I don't know if there's standard language. I call it GPM, so I'm going to say general purpose model every time, like ChatGPT or Claude, a finance tuned model, Copilot like a Hudson Labs, a Portrait, an AlphaSense that are tuned and grounded to documents, and then creating your own integrated system with your internal model router, connecting that to the right data. So natively these tools can call an internet search engine, or you can manually upload documents into Notebook LM, or you can create an integrated real-time data connectivity system, and then workflow and prompts. You can have a manual prompt library prompting the GPMs, or many of the FTMs are creating system integrated prompts and sort of push button workflow prompt integration. So that's sort of framing of the stack. And I'm sort of, I don't want to come off as too bearish, because I think, maybe 6 months ago, I almost saw very, very limited use cases, maybe, 5% of the typical workflows I do. I could see up to sort of 20% of the typical workflows that I do today, applicable to these tools. Simple things like summarization and distillation, super Google, but really, across ideation, risk checklist, language analysis, and first draft mentality. That, to me, sort of, as I think about my process, are the four big buckets that get me to 20%. We could talk about going to 65%. I think some of those quantitative elements. I think mostly investment research use cases today still fall mostly in the qualitative dimension for me personally, but that's a debate that we can have. So as we think about implementing AI, we really think about 12 different workflows, and these are the core workflows that we teach in the Analyst Academy, starting from why, explanatory variables, why stocks move up and down, ending with pitch like a pro, going through thesis development, deep dive, modeling, valuation expectations, and earnings season. And really what we'll talk today about is we'll sort of pick one of these modules and go deep into earnings season. And as we think about augmenting AI, to me, there are four pillars that matter. It's building the foundational understanding things, if you agree, like Moravec's paradox, understanding where these tools work, where they don't, understanding the first principles of how a large language model operates. Thinking thoughtfully about the right tool based on your budget, your mandate, your workflows. What is the right stack to deploy for your investment process? Thinking from a workflow perspective. Interviewed one of my friends who's a guest speaker in the program today. He said, if your process is broken, AI is not going to help it, right? What will help your process is if you have a good process already that you can thoughtfully decompose and augment where it makes sense. And then ultimately, investing, public equity analysis is very heterogeneous. Any of our clients are very different from one another, and so it's not a super linear deterministic process. Each client is different. Each analyst is different. Thinking thoughtfully about cracking open your own process and designing AI for your process. All right. So today we will talk about earnings, and the first slide we teach in the earnings module is why not to get married during earnings season. I got married, happiest day of my life, March 24th, 2012. My wife wanted to get married August 15th, and I said, there's absolutely no way that can happen. August 15th is the first day, tax day, also the first day of earnings season for my coverage. For every anniversary till the end of time, I would be busy on earnings season. So I won that debate, and we've enjoyed the happy dividends of quiet period, honeymoons, and anniversary trips ever since. Why is it so important not to get married during earnings season? Because your typical earnings day during the earnings season looks something like this. It looks like, if you're covering from the West Coast, like I did for a couple of years, waking up at 3 a.m., updating models, going through press releases, checking pre-market. It's a lot of cumbersome, high stakes work. The complicating factor being that in the teeth of earnings season, you might have 8 or 10 prints in a day. And so if I'm telling you that it takes 2 or 3 hours to go through one earnings process between listening to the call, updating the model, reading the notes, how can you possibly do that with 9 companies printing in a day? That's more hours in a day than there are, right? And so triage systems are really important. Right. And so I think that's why AI is really compelling in earnings, is we're already sort of triaging the work heavily. There's also a very important time. There's 4 print days per year, and those 2% of trading days drive 20% of idiosyncratic volatility. And the run up and the post trade, also a big monetization period for market neutral funds where idio vol is elevated. So I think something in the roughly sort of 50% of alpha, 50% of idio vol is capturable during earnings season. So I think sometimes when I talk to entrepreneurs in the space who are building co-pilots for public marketing investors, and start with earnings season. That's sort of the biggest lift that we need help in. And so and it's a hard one to do. But if we could build a co-pilot that's really helpful, that could make a big difference. Efficiency and precision are key in earnings. I could teach you how to build an earnings preview, do pre-earnings work, and I could teach you how to make a sandwich. But making 40 sandwiches in scale is a different issue. Making 40 sandwiches in 10 minutes is a completely different issue. And so a lot of the orientation towards earnings is not just doing things carefully, but doing things carefully and efficiently. So the promise and perils of AI in earnings season. The promise is, language is really important. The word selection and press release earnings calls parsed meticulously. Speed is key. Triage is important. We play this game of connecting the dots. Okay, company X prints. How does that lateral to the other players in the supply chain? What are the read-throughs and incrementality that can be assessed instantaneously? And what's the thesis creep objectivity? If I have a portfolio of 80 stocks that are printing every quarter, can I upload my thesis and kind of say, hey, is this thesis on track or not? The perils are that precision matters, and precision matters in earnings season. Small details matter. Whether if you're right or wrong on 20 bips on the gross margin, that can make all the difference. There's kind of no time to verify outputs if you're trading stocks before the market opens or after the market closes. There's kind of instantaneous liquidity after the news event. There's this three-dimensional complexity in earnings that good isn't necessarily good. It's the expectations gap relative to setup and expectations. And we'll talk a lot more today about the data problems. Most of the good data, certainly for the earnings season motion, is behind a paywall or requires some sort of effort to collect. It isn't available via web scrape. But I think there is a vision of really our industry ultimately pretty transformed by AI and workflows. It's sort of the integrated system, the Jarvis system in your Iron Man suit, if you will, of, hey, I can immediately update the Excel model, compare those numbers to consensus, compare that to my earnings preview and thesis, distill company and sector read-throughs, all in kind of an instantaneous way with a triage and alerting system saying, hey, your medtech long is printing over here. If you're not on this call, it sounds like things aren't going that well. Numbers are going to come down 7% based on what the management just said. Overreactions, underreactions, pattern recognitions and setups, and instantaneous response. And so I think the power of a co-pilot, make connections others don't quickly and decisively, is kind of a compelling opportunity for me. So it's digging deeper into earnings. One, I think there's three areas to the earnings cycle. There's the preview, where we're previewing for the entire coverage, thinking about what will matter to the earnings season, the macro, the fundamentals, what KPIs will matter. There's the print reaction, where you're updating your model, updating your thoughts. And then there's assessing, kind of sitting analytically, going through what went right, what went wrong. Do I want to continue to own this stock based on what happened? What are the read-throughs to all the other companies in my space? And ultimately, what is deterministic in earnings, to me, is sort of four things to understand. One is to understand the baseline of what's happening going into earnings. Where is the baseline set? Where are expectations set? What is management, sell side, and market narrative? Sort of critical to prepare so you can identify those deviations. You want to understand the incremental. And this is where the inter-quarter work matters so much. A lot of the framework, certainly in the multi-managers and thinking about earnings, is what happened last print, what happened between the print, and how will what happened between the print influence what happens on the next print. It's this sort of living your life quarter to quarter game, where what has changed since the last print? What are the incremental read-throughs since last quarter? Those deviations are where the alpha lies in earnings season. Understanding the expectations. What's the sell side consensus, line by line, the buy side whisper, market implied, and then the implied expectations from the widely distributed data and meetings. And then understanding the payoff structure. What's the base rate upside downside propensity in the stock, base rate upside downside propensity to cut guidance, and how much of a surprise factor is there ultimately. And so we talk about fundamental investing as a game of hidden information and three-dimensional complexity, and that's certainly true as you approach earnings season. So what we've kind of started the kickoff of doing for our AI program is breaking all 12 of our modules into the sub-modules, the discrete workflows of what are 8, 10, 12 different discrete workflows that I would undertake during an earnings season, anywhere from the prep of baseline language tone to the print of an earnings quick take to the post of a thesis creep tracker or post-print catalyst path. And what we've done, or what we're in the process of doing, is each of these individual workflows, we're taking those into 2-pagers, whereas one is kind of defining the manual process of that workflow, the why, what, and how, and turning each of those manual processes into a prompt with the idea of making, kind of experimenting with the augmentation process. So our view is a key step in harnessing AI investment in your investment research process is turning your own discrete workflows into systematic step-by-step processes that can be understood by the models. We'll give you sort of 3, we could go on for hours and hours about all of these. We'll give you sort of 3 discrete examples, some that were green checks, some that were not, as it relates to earnings. Number 1 is a full stack earnings preview, and then we do a language inflection. Then we'll talk about an entry point and catalyst assessment for American Eagle. So one sort of common example is, hey, our firm has a long position in NVIDIA. The earnings print's coming up in 2 days, and here I will remind you the disclaimer that nothing here is investment advice. I have no position in NVIDIA. I have no idea what will happen in NVIDIA. So take this all as sort of illustrative. What does that process look like? The process of we kind of call the distillation of all of our interquarter work down into earnings preparation plate. I kind of want to put everything on the plate that I need to make a decision. These are things like news items, management meeting and laterals, sell-side notes, field research notes, expert network calls, all of the work that I've been doing in my normal daily, weekly, monthly blocking and tackling, sort of analyzing and assessing my coverage space. I want to then take all of that down on paper and start to think about putting together an earnings preview, which effectively should answer 3 questions. 1, what does the market think? What are expectations, not just sell-side expectations, but what is the real market implied signal coming out of how the stock is traded, what the setup looks like, and then is there a trade here? Is there a big deviation between the market's gotten much more bearish, and based on my research, I actually think we should be getting more bullish. And so that deviation, that forking of expectations, tends to be one of the most powerful catalyst signals ahead of an earnings print. So I wanted to see if I just put a stock ChatGPT, not pro, not thinking, not deep research. Could I answer a simple question like, hey, NVIDIA is reporting earnings after the market closed on August 27th. Can you compile an important information to help me consider where there's a longer or short trade in NVIDIA in anticipation of that release? And what I got out, unfortunately, was not very good. Rather than being smarter than my smartest friend, it was probably dumber than my dumbest friend. Output almost complete gibberish. The bull case was, hey, Morgan Stanley raised their price target. If you're an analyst at a hedge fund, you walk into your PM's office and say, we should buy NVIDIA because Morgan Stanley raised their price target. That's almost a fireable offense. And so it kind of, wasn't even close in the realm of the right sort of institutional quality thinking. And there's really zero discussion of anything that really matters. The key debates on China and Blackwell that ultimately seems to be the hinge points on the quarter. So I would caution you very much to not use stock ChatGPT to do an earnings preview. Certainly not to identify anything helpful. But sort of thinking about the first principles of why. I mean, sort of my skeptical view on this is: should we really expect ChatGPT to be able to do a complicated process like this? LLMs are obviously a powerful technology when deployed well, but a general purpose model with no grounding is effectively a web scrape of 2.7 billion websites with no real reliability hierarchy on those websites. Train on human feedback, labelers in Kenya and Philippines and South Asia, and no shade to the labelers, doing hard work there. They probably don't have the institutional understanding of these sort of workflows that we're doing. And then a tool that's able to call search, but that search, certainly in ChatGPT's case, as far as I can tell is the Bing search engine, which raise your hand if you use the Bing search engine. I think none of us use the Bing search engine because it sucks. So I think those are some of the fundamental limitations. As you dig deeper into that NVIDIA case, what you see is that the news that report is pulling from is things like investors.com and Barron's and TipRanks and FX Empire. There was a chart from Statista that a lot of the information is coming from Reddit and Wikipedia and Yelp and other areas. These aren't news sources that we would typically consider to be institutional grade. The standard news sources alone, like Bloomberg, FactSet, Street Account, Wall Street Journal, Reuters, Financial Times, look like they continue to be behind a paywall. They're not searchable. And so if LLMs can't even get news correct when it comes to generating real-time outputs, I would sort of personally be a bit skeptical on that. And so I've been thinking about this framework on what raw information does an LLM have to have access to be fundamentally reliable, or at least have the ability to be fundamentally reliable. And I kind of came up with 8 high-quality news filings, investor decks, transcripts, which are all sort of in the blue. I'd say not proprietary, kind of hard to gather, require a little bit of paywall on the news side, but pretty much anyone can get access to this information. I'd say semi-proprietary would be sell-side research, expert network transcripts. They cost money, but they're sort of distributed widely to really anyone who wants access. And then in the purple, I'd say more proprietary, things like data, market data, fundamental data, alt data, which is generally all distilled down into an Excel model and internal notes. These are harder to ingest, obviously, for compliance reasons. But ultimately, I think some like the next frontier, maybe the current frontier of AI, is ingesting all of these 8 into a database that all flows into comprehension, analysis, and decision making. The interesting thing is when I look at some of the tools that integrate some of these 8, I'm pretty impressed by the quality. AlphaSense candidly has gotten a lot better over the last 6 months, even with 5 or 6 of the essential 8, including in the system. I gave it the same prompt, and I thought it nailed sort of all of the checks that I was looking for in the preview, and gave some frameworks that I thought were quite helpful and quite useful. I'd probably be using it for all of my names, to be honest, if I were back in seat. I also use Hudson Labs to do some of these processes too, to sort of take what was a 2 or 3 hour process down to a 20-minute process by getting up to speed on what happened last quarter, seeing if the tool could pull some of the financial nuance, like the inventory write down from the China inventory last quarter, get a baseline on Blackwell ROM. Blackwell RAM. So a little bit of just efficiency. One of the things I've really liked about the Copilot finance tune models is the ability to go into guidance and not take just the quantitative guidance, but pull the qualitative guidance, the notes on an earnings call that you kind of have to go back through the call with a highlighter in the transcript to pull out, the company said a meaningful decrease in China data center revenue. They said they're working towards achieving gross margins in the 70% range. These sort of key guidance comments that won't come out if you hit GUID and Bloomberg, but are really important in setting the baseline for the fundamental analysis. Ultimately, what these tools, I think, are good at doing is allowing me, certainly I've kind of only spent 20, 30 minutes on this, is to go into a key debate and pick a debate on NVIDIA, like the China issue that's happening, where they had $2.5 billion in Q1 that was pulled out, removed $8 billion from the Q2 guide based on shipping delays or tariff issues. They had to pull revenue out of the guide for NVIDIA's China business. Now, what's interesting going through all this sort of commentary is that you see that I saw that in July there was a deal on the H20 with the 15% levy. There's still some numbers from China in the sell side consensus, and there was sort of contrasting information about whether production was halted or not. This is, so, usually this would take me reading a bunch of sell-side research, talking to the company, going through transcripts, reading a bunch of news to distill it down manually. But the nice part about some of these emerging tools is I could do this research pretty quickly, pretty seamlessly, pull out data points out of Hudson Labs, like, hey, China was out of the forecast. Now we're assuming zero. Okay, they sort of took China completely out of the guide. China came back. That makes me wonder, is there upside to the guide? Now, when this came back in the quarter matters. And so this isn't sort of the end point of my research, but this is probably enough for me to get on the call with an IR ahead of quiet period and say, how does this work when China data sends are bounce back? What's embedded in consensus? I can kind of pull sell side models, visible alpha to see that. Sort of coming back to the key question is, how will numbers on this piece change in August 27th? Are we going to miss because there's 600 million still in the number? This deal didn't happen until the end of the quarter, so 600 is going to be zero. Is there upside to the Q3 guide because it's going to come roaring back in Q3, and so the guide is going to surprise us to the upside in Q3? I think these are questions that require further research, but this process kind of helped me get to that question, that framing, more quickly than I would have been otherwise, and did so in sort of a reliability architecture that was a lot better than GPT. With that, I will hand it over to Kris, who is going to walk through just some of the challenges of using a GPM, a general purpose model versus a finance 2 model. And this, again, not meant to be a commercial for Hudson Labs or for finance 2 models. Specifically, after her session, we're going to walk through a few areas where I think there are some really interesting use cases for general purpose models. But what we want to do is we want to convey the nuance to everyone.
Yeah, that's absolutely right. One thing that I want to make sure comes across for this presentation is we're an AI company, we're AI bulls, and one thing that is sort of an unfortunate side effect of the AI hype is that people expect super intelligence, and when they don't get it, sometimes conclude that the model doesn't work, or they'll try something in GPT-5, see it doesn't work, and decide that AI can't solve that problem, which isn't necessarily true. There's lots of interesting and unique ways to apply a more sophisticated approach to using AI and getting exactly what you want. So we're going to talk through some pitfalls, but we're also going to talk through solutions. There are solutions to all of these issues that we're highlighting today. So Brett talked about this a fair bit, so I won't spend too much time on it. We all know that the information on the web isn't great and that we shouldn't be using it as part of our research process. But even though we all know that, I know a lot of people on this call are using it anyway, simply because it's really easy to type in a prompt to GPT-5 or Perplexity Pro or Claude or whatever it is. It's already connected to the web. You don't have to upload all of your own documents. And sometimes it will do an okay job. Just to keep in mind, web data isn't just noisy, it's also delayed. Investor relations websites don't always get indexed right away. Sometimes it can take days. Same goes for news. Google News indexing is also a little bit slow. So expect delayed information if you're using web results, as well as not great information. But as Brett mentioned, most of the good stuff is behind a paywall wall, so you probably shouldn't be using web-based sourcing too much, unless you're looking for something that is available on the web. Sort of goes without saying, this is just a very obvious example of this going wrong. I'm sure you've all had this happen to you. I specifically asked GPT-5 for quotes from the earnings call. I said American Eagle earnings call multiple times in the prompt. It says these are verbatim high impact quotes from the earnings call. The earnings call is not a source being used at all in this answer. Not one of the quotes is coming from the call. They are all, in fact, quotes are just from other things. Not great. Using products with access to timely, high quality data does get you partway there. One thing to note is that source selection is actually a technically challenging issue. So just because you have access to timely, high quality data doesn't necessarily mean that the AI system you're using will choose the right data sources. It is quite challenging. I'm not going to say this is something that we have fully solved, where we always choose exactly the right source for the task you're looking for. But at Hudson Labs, we do give you the option to choose your own sources for any specific question, etc. So it's important to both have access to a tool that has high quality data, but also a tool that is choosing high quality data or allowing you to choose high quality data when you ask a question. Proof that we can get quotes from an earnings call. I think the next couple examples are going to be a lot more interesting and informative to a lot of people on this call, particularly in the context of earnings season. So one thing that we've seen happen a fair bit, and David can maybe speak to this as well, is we've seen, sort of bigger teams go out and purchase, say, an OpenAI API or some generalist API, take it, plug it on top of their internal data, results aren't great, decide, AI doesn't work, move on. So that's an instance where the data problem is solved, but the results still aren't great. We're going to talk about why some of those issues exist and how they can be fixed very briefly. So one of the biggest issues that you'll see is the multi-document problem. Very simple concept. As the number of documents increase, the precision decreases. This is very easy to show. This is true even for reasoning models or thinking models like O3. So just keep in mind, if you're trying to process more than 2 earnings calls worth of information, expect results to degrade. I have people come to me all the time with like, hey, like I uploaded the S1 myself. I know it has access to the S1. Why, or the prospectus, why can't it get this very specific detail about this, agreement here? And that will be because of the context window issues and recall when there's too much information. Here's an example. This was the first example I ran. Just as it's very easy to find these issues. So I asked for stores KPIs at American Eagle. In this instance, correctly sourcing from the IR website, but it thought for 6.5 minutes, and all of those numbers in red are hallucinated. So not ideal. And this is not unique to this situation. You can replicate what I just did with any generalist system using virtually any ticker. It's going to be more problematic for companies outside of Mag 7 where there's less information, or the models are less well tuned to those names, and any KPI that isn't on the face of the financials. You can expect at least one error for most multi-period and multi-document queries in that category. The solution is AI architecture. ChatGPT is a product. Products need to be adapted for the specific situation. We have a very unique and proprietary architecture on our backend, a very robust retrieval system, and topic spans, hopefully the best in the world. But anytime you're doing anything like this internally, just make sure that you're not just taking an OpenAI wrapper or some other wrapper and plopping it on top. You actually have an architecture on the backend to support these types of queries. If you don't have that, you won't be able to get the results that you expect. This is our output for summary of store trends, 8 quarters. You can see a very short prompt. We're getting way more detail, way more information than that generalist query I ran through ChatGPT. And every single one of these numbers is 100% correct. However, it looks less right than the GPT-5 output, which is very annoying. Every one of the sort of anomalous looking stores at end numbers here looks less anomalous in the GPT-5 output. So that's just something to keep in mind if you are trying to catch hallucination. Looking for things that look weird doesn't always work because GPT-5's really, any of these generalist models, I should stop. Just calling out GPT-5, it was where we did the comparison, but OpenAI is a great, has an incredible technical team. It's just not built for this specifically. And if you are looking to check errors, they can be quite difficult to find. So that's the multi-document problem. The other common issue that you should be paying attention to going into earnings is the guidance problem. As Brett mentioned, the way that models AI fails is unexpected. And things that are really easy for humans, like understanding tense, can be really challenging for AI models. So one example, we are investing more and more next quarter. I don't think anyone on this call thought that I wasn't referring to the future when I said that. But AI models are, if there's just a generalist model, will very frequently focus on the tense and ignore the other cues and assume that statement is actually present tense, not related to the future. Why should you care? Because if you ask a generalist system, so that's either GPT-5 or any product that's implemented a generalist infrastructure, to get guidance, you're going to run into this issue. We asked for all forward-looking statements. It gave me a lot of statements, but only more or less only statements that included the word expect or looking forward. These are just 3 sentences that got missed of many, but these are pretty important. You can see, AI is so smart, but missed CapEx guidance simply because of now expected. Expected is past tense, got missed. And very easy to solve this problem, though. You just need to be using a model that specifically is trained to identify guidance. Internally in Hudson Labs, whenever someone types in the word guidance, expectation, etc., we actually route those queries to a separate system and model to make sure all of that gets picked up. And as you can see here, all of those missing statements are being incorporated. Did I miss anything, Brett?
No, that was great, Kris. And it's sort of frustrating in a way. Like the more I peel back the onions on AI, the more you see these sort of complicated dynamics. It's not as always straightforward. I think that sort of I naively thought, hey, I could drop in 50 documents and you could create this nice quantitatively supported investment thesis. I think there's some issues that you raised around, retrieval, multi-document tense that sometimes makes it a little bit more complicated than just the perception. Not to say we're trying to push, finance 2 models or general purpose models, because I think there's times use either. But what we want to do is just show the nuance, show the complexity around these issues.
Yeah, absolutely. And I should say, I spent a lot of time saying like GPT-5 can't do this, OpenAI wrappers can't do this. We use components of OpenAI models in our product. They're great models. They're extraordinarily powerful. It's just if you're using the wrong model for the wrong task or with the wrong infrastructure, you run into problems. It's not an issue necessarily with the underlying technology. It's an implementation problem.
Yeah, I think as we thought about this exact conversation, that's why we've sort of given tool selection its own pillar in this whole transition. Is sort of thoughtful tool selection. Handing your entire process over to ChatGPT is probably not a great idea. It's probably a recipe for for error. But there are certain areas where the general purpose models I think are great, sometimes more powerful, sometimes more creative retrieval tools. So I'll sort of show you a few examples of that now. So going back to the workflows, our framework is it's important to sit down and really crack open your workflows and be thoughtful on which of these workflows should be augmented and which shouldn't. One of the obvious ones to me is any sort of baselining around language tone. There's a kind of long, reliable quant alpha called natural language processing. It looks at sentiment and tone analysis, linguistic confidence indicators, other frameworks like evasiveness detection, a fog index, risk disclosure, evolution. And really the key framework around NLP is identification of the inflection matters. Why? Well, identification of the language inflection is often a precursor to the quantitative inflection of revenues, profit, and cash flow. It's also why former pod monkeys like Andrew and I flew around to every investor conference on the calendar, meeting with the same CFO 6 times per quarter, carefully parsing the language that he or she used in that meeting. And then going out to the halls of the Phoenician, talking to the other pod monkeys and parsing. Did the CFO sound more bullish? Did she say there's a push out? Right? Why? Is because those small language inflections really matter. And so a lot of, certainly what the multi-manager process is we become human NLP machines. That's kind of a lot of what we're doing in our process. Well, guess what? Our human brain isn't certainly very coded for that. It's a skill that takes time. And it's complicated, it's nuanced. I could look at stocks like Novo Nordisk, the maker of Ozempic, which is down 75% from its peak in the fall of 2024. And I could go back and I can do a case study on this. And I say, okay, how could I apply NLP inflection to try and identify a shift here, right? What you see if you prompt GPT-5, again, this is a general purpose model, it's not a Hudson Labs, and anyone can do this. What you see is that you see a chronological sentiment trajectory showing in February 24 was really the last time management communicated this sort of strong celebratory, positive confidence. After November, there wasn't really a overtly negative tone, but what you had was an absence of bullishness short, right? When a management team goes from pounding the table, everything's great, to using even slightly toned down language, that's an inflection. And often that's an investable inflection. So step one often is implying this framework is a reduced use of strong language, which is a signal. And your catalyst, like sort of the end of the trade, obviously, is when there's elevated use of negative language. So it's very nuanced. Right? Experienced pod investors don't walk in the door really with this skill. It's something you tune your brain to over time. Now, language inflection is on its own isn't a thesis, but it can be a powerful signal for deeper due diligence. Oh, I just met with the Novo CFO. He sounded a little bit more balanced. I wonder what's happening on the compounding threat. Let me go do a bunch of calls and a survey to see if I can quantify that reduction in bullishness. Obviously, a high profile one was the Meta multi-bagger from the fall of 22. And this was sort of textbook language inflection. We went from fiscal Q1 defensive to resolve to transitional to discipline, and discipline was the bottom. Execution and aggressiveness sort of added fuel to the fire. So the Meta story really shifted when Zuck uttered the words "year of efficiency" and that started to lead to Real's monetization progress, emerging AI benefits. It was all present in the transcripts. So stock isn't just a set of numbers, a set of figures alone. Stocks are stories too. So much of the value of an equity lies in the terminus, that the language used by management team and the inflections of that language are a key part of the multiples that stocks ultimately trade at. Now, this is sort of easy for one person to do in one company, but again, if I'm a PM covering 300 stocks, or I'm a generalist covering 300 stocks, The promise of this sort of system is I have a prompt for this and I can press a button and I could look at 100 names sort of pretty easily on looking for these language and narrative inflections. I could also go to a conference, JP Morgan Healthcare Conference, where I took a team of 9, all my 8 other analysts taking verbatim notes. I would love to drop 60 pages of raw notes into the system and help me identify the positive inflections relative to the going in baseline on management commentary. Where were the raw language usages showing positive or negative inflection? To me, that's a really powerful use case. When I talk to certainly multi-manager investors who aren't using AI much, I point them to this. So like, you should do this because it's kind of easy to know how to. Compliance is a concern about uploading your notes. So really the framework here is not, I showed you 2 sort of past case studies. The framework on NLP is really anticipatory NLP. It's identifying the baseline language. What's been the optimism, pessimism, obfuscation, topic selection, hedges or openness, kind of where we at, and then we're really seeking deviations from that baseline. The interquarter is where the juice happens. Going to investor conferences, talking to the company, IR calls, interviews, and podcasts, because often fundamentals will change during the quarter. Things might have been great in May, and June and July were slow, and that slowness could lead to a guide down in the August print. Right, the print is really the reveal of what happened interquarter. That's where guidances change. It's the quantification of these tone shifts where the guidance actually gets cut. It was why the catalyst on Novo was the guidance reduction. Right, our job was to anticipate that guidance reduction, and this sort of NLP Copilot is I think is a native talent of native talent. There's also a lot of other tools, engineering tools being built up around AI that aren't necessarily AI, but AI is making some of these tools easier. AI powered web scraping is one. AI powered YouTube transcript generators are another. So basically what I've been doing in a few instances is taking, a Comb, which is this free YouTube transcript generator. I could go see if I'm looking at NVIDIA, Jensen does a bunch of these podcasts, YouTubes, et cetera. I can go, rather than listening to this 36-minute webinar, I could go drop that into YouTube. I could get the transcript. I could go hunt for all of the public statements after May 28th. And then I could go drop that transcript into my inflection monitor. All right, here I'm showing Notebook LM, so I'm not just showing paid portals. I could drop all the pre-existing notes, transcripts, statements, and I could drop in a prompt of compare this statement to the pre-existing baseline. Right, I'll get a quick summary. Hey, the podcast is modestly more positive in framing, policy tailwinds, and less balance on near-term operational friction. No new negative signals on the core drivers. All right, great. If I'm a TMT portfolio manager trying to stay on top of 300 names, ton of news flow, I'm constantly in triage mode. This could allow me to go get that checkbox. Is it going to be perfect? No, but I don't have the ability to go listen to every podcast, every management meeting across my space, particularly for generalists or broader coverage. Building a triage system for management meetings is really important. Last one I'll show. This happens a lot. When this happens to you, hey, your PM walks in your office. Hey, American Eagle prints next week. Should be, I've been hearing a lot about it with the Sydney Sweeney driven turnaround. Is there a long trade into the print based on that turnaround? All right, I'm doing a bunch of different things. Now my PM tasked me with creating an earnings preview effectively, trying to identify whether we should conduct a trade into the print, right? I don't have a lot of time to do this, so my typical 60-hour due diligence from scratch process, I really don't have time for, right? I'm doing all my other earnings previews, whatever else is going on that week. So this is sort of a classic triage system, a thesis ideation with urgency. So in this case, I would deploy a process I really like of recursive prompt engineering. So I showed you the initial NVIDIA earnings preview. I cheated a little bit because I just put like 10 words into the context window. And so if you don't prompt the context window well, there's a question if you had a more specificity to the prompts, would it give a better outcome? It certainly would. And so what I like to do, because I'm lazy, is I like to create a little just conversation with Claude, which I find to be a little bit better of a writer, to ask me to build a deep ChatGPT deep research prompt, which creates this nicely structured prompt with all the caveats, which then I'll feed into ChatGPT with deep research. So answer the question, is there a potential trade based on what's happening with the Sydney Sweeney driven social media and broader media excitement around the brand? In this instance, I sort of picked on ChatGPT earlier due to the accuracy. It was pretty damn good in this use case. It pulled a bunch of issues, sort of framed the issues, kind of similar to how FTM would. It pulled interesting things like a Forbes article that cited traffic declined 9% in the week after. Now that's a small N. Hudson Labs pulled the historical priors of whether Addison Rae or Chase Stokes. I'm too old to know who either of those are. Influencers that led to sort of short, 3-4 week uplifts that haven't had a big turnaround. And so overall, the framework is a little bit more cautious on the sustainable uplift based on this campaign. I could kind of do a quick sort of setup work. I saw the guidance was reduced, tariff impact. Tariff impact has pretty big impact to the operating income outlook for the year, kind of almost over 10% impact. So is that something I need to have a sense of? Is the market complacent on that impact? I kind of see where the baseline same store sales have been without having to build a model. It's like, okay, if there's an inflection, where do we get to? We've already been at 5%, 2%. So what does a bull, base, and bear, right? And in this instance, what I like about this tool for the rapid ideation, time crunch ideation is it doesn't have to be right? It could be wrong. But what I'm looking for right now is I'm looking for in a quick analysis, a sniff test to really frame, should I drop everything for the next 7 days ahead of the print? Or does this give me 4 or 5 nuggets to go back to my PM and I said, hey, I looked at this for 2 hours, right? This is the bull bear. This is what's happening. Here's a few nuggets. What do you think? Should I continue to go down this path? So accuracy doesn't matter that much. I can deal with hallucinations. I can deal with problems in the analysis. To me, doing that 100 times is much better than spending 3 days 100 times to get to that answer, short-circuiting that spinning your wheels motion. So I'm trying to avoid wasting the 3 days, get to a quick answer and say, okay, I've triaged that. I don't think it's that interesting for XYZ reason. I'll go here. In that sense, I think a general purpose model is a really great use case for that. So in wrapping up, a few sort of thoughts, and I'm very happy to debate and discuss all of this with Andrew, Kris, and Dave, and we'll take any of your questions. Is that my sort of belief is a general purpose model can't complete a full stack agentic earnings analysis, particularly GPM without access to the essential 8, due to some fundamental reasons: the hive mind, training corpus, and lack of essential 8 data integration. But when linked with data and finance tunes, the results of some of these underlying models are getting pretty good. I think it's something that I would certainly encourage clients not to sort of try out GPT-5, say, hey, this sucks, I'm not going to do anything more. I think there is really something here. The ability to see these sort of good earnings previews in a finance tune model, to me, is sort of probably at the point where it's an important tool in my stack, but tool selection and system design are important considerations. With all of that said, general purpose models can be quite helpful for certain elements of earnings season, particularly language analysis and ideation elements where I need to move quickly. And sometimes you need to move quickly. There might be a new litigation announced in an earnings preview and the stock gap's down 15%. There's instant liquidity after market close in the aftermarket. I might need to do analysis in 10 minutes to get to a conclusion whether this is a real risk or not. And so those triage elements can be really helpful. We're triaging these issues already, triaging with sell side or other ways. So whether it's language affection or inflection, is quick ideation, sniff test, give me a quick bull-based bear, catalyst path, thesis ideation. The general tools to me are very helpful tools in that sense. So that's really this is a snippet of the curriculum that we're building for the AI Academy. Will go into earnings season and many other areas. We'll probably use this recorded version so as not to be redundant. But really, our goal is to try and help meet you where you are and think about cracking open your own investment process to ultimately implement your own AI system. Part of the fun of that will be 5-month-long case studies where as a group we'll go through navigating earnings season together, and at the end of the month we'll sort of compare notes on what worked, what didn't with Hudson Labs, Portrait Labs, and all the other tools, as well as ChatGPT, Perplexity, et cetera. So we'll go through modeling, Copilot, and thesis tracking, and thesis development, sort of idea generation, sniff test, and then KPI inflection monitor, trying to really deploy AI tools to find alpha signals and alpha inflections. At the end, we will do an AI showcase where we plan to have effectively a pitch competition where the students will show their most creative or compelling AI use cases. And so that will be a fun sort of learning together, cohesive element. With that was all I had. We will take any questions now, and while we queue for questions, I'll open the mic to Andrew, Kris, or Dave. If you have any sort of thoughts or comments, anything you'd like to add, revise, disagree with on any of that.
One thought I would add is one reason that AI models are a great way to get bull-bear thesis is, even if you're just working with model memory, a generalist model is going to have seen virtually everything the internet has ever said about any stock. So all of that is baked into model memory without even having to pull new information generally, unless you're looking at a super undercovered name, and it's not going to do as well. But as Brett mentioned, it's very important to use that to sort of understand, what is the bear versus bull thesis out there, and not relying on the model to actually construct your own thesis. I do just raise that because we have seen a rise in really complicated prompts with the end goal of being like, hey, make my decision for me. And I think we're going to go into why that's not a good idea in various other sessions here. But AI is incredible. It's able to get information from images and in a presentation and in the note of a transcript and bring that all together for you really, really quickly. All of those things you don't have to worry about, but you shouldn't be outsourcing critical thinking. And if you're here today for this webinar, you probably aren't.
One thing I would add, and this is a good time to do it since I think we're getting to the tail end of earnings season, is I would try, if you have a typical type of recap that you do or a preview and you've done it in the past, go ahead and try to prompt GPT or whatever general purpose model you want to try to create it. You'd be surprised how well it can do as a first draft, as long as you give it the right material. And it won't be perfect. It'll have a lot of the mistakes that Brett has talked about, and Kris as well. But I think it's worth experimenting. And the time to prepare for earnings season and all that is obviously when we're not in earnings season. So that's one thing I'd recommend is I think with anything, it's testing out yourself a bit and getting a feel for the sharp edges of where it's good and not. And hopefully there will be certain things that it will be helpful in automating as you deal with those days where a dozen companies are reporting.
David, you're supposed to tell them to sign up for a Hudson Labs trial.
Yes, of course.
Thank you.
Question: how does AI work in smaller stocks or specific industries, i.e. small cap energy? Any takeaways there? I'd be curious, Kris and David's view on that. I'd say one thing I've noticed is that when I I get really interesting results, really great results with GPMs when there's fundamentally a lot of the raw information on the open web. And so if I'm looking to do a management background check on Brian Nickel, who went from Chipotle to Starbucks, and identify whether his skill set is a good match for the issues happening at Starbucks, the result is tremendous because there's been so much written, so much thoughtful written about both, about what Brian has done at Chipotle and the issues at Starbucks. And so it does a really good job of distillation. If I want to identify what's happening at United Health with the Medicare Advantage crisis, so much of the raw information is available in CMS documents or a different sort of open web access. It does a great job of distilling that down, right? For a small cap stock, there's not that many journalists writing thematic pieces about the small cap energy space. There's not as much information out there on the web. To me, those sort of results haven't been as good, and it requires this sort of thoughtful data strategy about ingesting your own maybe uploading sell-side research or calls or your own notes to really provide enough raw information to get a more usable output. Even like an NVIDIA versus American Eagle, Alpha Sense wasn't as good as on American Eagle because it didn't have as many expert network calls in the library. On NVIDIA, I think there was 25 expert network calls since the last quarter. So there's a lot more raw information from sell-side notes and expert network calls on which to draw some interesting conclusions. Kris, do you have any thoughts on that?
Yeah, I'm to the extent that we're using AI as a synonym for, say, ChatGPT web, it's going to be a lot worse. But if we think about AI as just a generalist tool, for our system specifically, if we're thinking about how well our AI does at extracting niche metrics from an earnings transcript at a micro cap versus an earnings transcript or a press release or a presentation at a large cap, that there's no performance differential whatsoever. So as long as the source documents exist, there's not going to be any, and the infrastructure is the same, there's not going to be any difference between a small cap and a large cap. But of course, when there is an information differential, there's going to be a huge difference. And the other thing, so Hudson Labs, we focus on getting information from source documents and limit access to model memory. If you are using model memory or just like querying the model directly without a connection to source, it's going to be a lot worse when you're talking about smaller stocks, particularly if you're asking for just a bull or bear case off the bat. Did that make sense?
Yeah, that makes sense. A question for you, David, since you commented on this from Anonymous. I typically attach the source files of earnings releases, press release, call transcript, sell-side notes to LLMs to create detailed earnings summary reports, often using deep research functionality. Does this help avoid some of the inaccuracy, poor sourcing issues?
So the answer is it helps. It is not a panacea, as Kris pointed out. You want to be ideally you want to be working with a system where that is natively built in. Interestingly, even if you load all that into the context window, depending on the length of the content, it might not be read directly. What the system ends up doing is it will run searches. And if you open one document, it's probably not going to search. But at a certain point, ChatGPT or some of these other models will default to running searches. And the problem with searches is you might miss things. For instance, a common mistake that I saw models make is in the healthcare space is someone will ask about the cost ratio and not find MLR, which is a disclosed metric that is the same thing, but is in an embedding model that's going to run this search. It's not obviously going to get a good match. And so I would highly encourage you to be very specific to the LLM, to read the full document and to focus and only use the source material. In fact, I would actually put in the prompt, do not search the web, as a tool. So those are some of the things I would do to try to limit that. The last thing I'll note as well is just be really mindful that these systems can sometimes get tripped up to the extent that the content you're putting in there is like one of these company exhibits that just has like a massive data table. Like if you ever looked at JP Morgan or Capital One's like 8K exhibits, I mean, it's thousands of metrics. And these models are not great, as Brett pointed out, at reasoning quantitatively. So that I would say anything that's pulling like something, a non-GAAP metric from a data exhibit, I would just double check for sure.
Great. That makes sense. Yeah, I don't know if it's just me, but I found the search functionality on some of these GPMs to be more and more problematic because they're reasoning based on really low quality sources. So I found myself doing exactly that, David. I found myself turning search off in more situations.
Yeah, well, one thing I'd recommend doing if you really want to manually control that is like just go to the create an API account, a developer account, and just do it through the playground. Again, the best solution is to use something like Hudson Labs or Portrait for sure, and then that's going to make your life a lot easier. But if you want to actually do it yourself, like either do it through the API or go to the OpenAI playground, and then you can control exactly the data sources that are being used and make sure that search isn't being used as part of that.
And just to clarify, Brett, when David says search, he's not talking about web search. He's talking about search within documents.
Oh, okay.
Like this is the same sort of idea that we were chatting about before when we're thinking about really long documents. When there's too much information, the model needs a way to make sure it segments a filing to get that information, and the way it will try to pull in the right information is by searching for that thing through the document and pulling that in. It's sort of like the most basic version of retrieval. Okay. And what you'll find if you use Portrait AI, I assume, knowing very little about your product, David, is that if you're using you will be using a more advanced retrieval system that's going to be incorporating that type of information. So unrelated to web search, it's the search process that's happening within the actual document you want.
Gotcha. Yeah, that makes sense. That makes sense. Question from David. Hello, David. Are there any prompts for, I'll give this one to you, David, because I think Portrait is sort of built around kind of first use case was idea generation. Are there prompts for idea generation that you found especially helpful, useful? How effective do you think AI can be in helping with financial filings, for example, 10Ks, and what's the best way to leverage it? Thanks for taking the time to share your thoughts.
Yeah, sure. So I think it can be very useful. It is one of the use cases that I think the general models struggle with. And so it's one of the things that we spend a lot of time on Portrait for sure. So please reach out. Happy to kind of show you the platform. In general, though, for using it for general use case, I think what these models are actually, the thing I would think about for idea generation is to actually use the model's memory and general knowledge in some sense, because it's like, so let's say, for instance, you want to find, like, the thing it will not do a good job of is if you want to say, hey, find me every company who has a risk factor that says a single contract is worth at least 10% of the revenue in the business. Right? Like, it's not like none of the general purpose models are going to be good at doing that. So I wouldn't try doing that. What they're very good at is like, hey, this just happened. Help me think through some ideas. So like something I would have definitely done if I was in my old seat is the day the Liberation Day comes out, I immediately would have said, okay, like here are the set of tariffs, like who are some winners and losers going to be, and some non-obvious ones. And the models are actually smart. And again, this is not a precision-based task. It's an ideation task. And the models are smart enough and have enough kind of background knowledge to think like, oh, tariffs. Okay, great. Like a winner is going to be someone with a domestic supply chain when the peers are more international in nature, or a winner is going to be, you know, like a US based auto. And so I would use it as like a brainstorming partner of like, hey, here's a theme or here's something interesting. Like, help me find ideas or second order ideas as it relates to this. And I think the general purpose models will be pretty good and fun to do that with. So those are the types of prompts I would try for an idea generation perspective today.
That sounds great. Yeah, I would also mention on prompting. That's an area we're developing as well, and we're going to do a free webinar on that September 8th, where David is going to come and bring a few frameworks, and I'll bring a few frameworks on prompting. So I think that's open for registration as well too. Question from Brett. Great name. Isn't AI-aided research just going to become table stakes? And if there's any edge, won't it be held by the largest wallets teams like pods? It's a very interesting sort of I'll give my 2 cents on this because I've been thinking a lot about this. So there's sort of a couple things. One, I've been thinking a lot about the prior of alt data. And so alt data really came into use case 2010, 2012, like the early 2010s, starting with credit card panels. Before that, as on a consumer team, we would run surveys like crazy of every company across our coverage, basically every quarter. We started to get these credit card panels that were much more accurate and seamless. And there was a window of time where distribution was tight and alt data was really powerful, almost sort of singularly powerful in predicting quarters for companies. So almost a sort of alpha window. I don't know if it's 2015, 2016, somewhere around that time, the sort of transition, you'll hear this a lot, yesterday's alpha is today's beta, where alt data kind of became beta. I think most funds that I speak to at least don't sort of singularly think that alt data like app tracking or credit card panels are a singular source of alpha. So I think that's sort of one framework to think about AI. Now, the further I've gone down this rabbit hole, the more I've realized how complicated actually deploying AI is. Really powerful when you use it. You use it well. I think it'll allow us to speed up and go deeper on research. Whether that will start to compress alpha pools, I don't know. I kind of view it as a next step on the long curve of technological innovation. I will take the under on how many jobs this industry loses due to AI over the next 10 years. I think it's just another tool, like a qualitative Microsoft Excel effectively. I'm open-minded on whether that changes or not. David, you spent time in the investor seat. Now you're in the AI seat. How would you think about that question?
Yeah, I think Brett, you put it pretty much the way I'd frame it, right? Like I think at the end of the day, Bloomberg is not a source of edge, but we probably are paying for Bloomberg. It's like you kind of you need to play defense before you can play offense. I think also I don't know if Bloomberg is the best analogy, actually. I think it's a little bit like Microsoft Excel. Like I bet you the first folks who got their hands on Lotus Notes in the 80s probably had a bit of a capability edge in their ability to analyze things. And then that obviously got wiped away over time, but you'd be crazy to do the job today without Microsoft Excel. I think it's kind of the same thing. And what's interesting is unlike Excel, which is a stable platform, you learn it and then you kind of know it, is like AI is very much a continuously evolving technology. And so it is less about like mastering it today, and it's more about, okay, I understand it, and I'm going to, there's this window to continuously be a step ahead if you spend the time kind of investing in building out or integrating it into the research process. So I think in that sense, like someone who mastered the use of AI in the research process a year ago is very out of date today. And so in that sense, it is not just like a binary, you know it or you have it or you don't. It's like next year, I'm sure we'll be talking about new types of ways of utilizing these engines. And each one's almost like a brand new technology onto itself. So that's kind of the only thing I'd add to that.
Yeah, and I think it's a bit of a paradox in a way that I think generally based on all my conversations, the larger the fund, the less they're integrating AI, which is sort of counterintuitive in a sense. I think there's a couple of reasons. Number one, the larger funds have bigger teams, right? The larger funds have analysts who are covering 30 to 50 stocks that have a well-refined, process for the high stakes workflows of this job, right? And so there's not as much of an opportunity to backfill that. There's not the sort of same resource constraint to do that. And there's also generally a much higher respect for compliance and issues like redistribution agreements of sell-side research. And so, when I was in New York a couple weeks ago, I met with someone at a big fund who you think would be deploying AI like crazy, and they're not allowed to use AI in their investment research process at all. So that's somewhat common. Now, the smaller funds are using this stuff like crazy, and they're starting to, people who are, so I think reliable in the sense of talking about massive productivity improvements, particularly for generalist investors that can kind of go anywhere. The sort of velocity improvements on the top of funnel, but then the idea tracking processes for their sort of pipeline and portfolio tools are allowing some smaller teams to do a lot more with a lot less. To me, what's sort of intriguing about these tools and the way processes could evolve is this concept I'm kind of thinking about called process blending. I'll give you an example. At a multi-manager, Andrew and I probably spent 50% of our time on the earnings season motion, right? Because it's so important, 50% alpha, 50% emotion, right? If you're at a long only where your holding period is 3 years, you'd be silly to spend 50% of your time on the earnings season motion. But you still might have a portfolio of 80 stocks, and quarters are still a big volatility event, and a 3-year thesis can still be decomposed into 12 prints. And so what I might encourage you to do is think about really leading AI augmented on earnings. Still spend 10% of your time on earnings, but try to do more with less with some of these tools and processes and frameworks. And that might come down to, of your 80 stock portfolio, maybe 1 or 2 names every quarter, you get a flashing red light. Hey, based on this management call note, they're talking about this issue. Based on this other thing, the KPI might decelerate. It might lead you to, out of that portfolio, sell 1 or 2 stocks ahead of a bad quarter every year, right? Not massively changing your portfolio, but that process could allow you to do a lot more with less. I'd invert that and go to my pod people, right? You're not doing, sort of a 2-day deep dive analysis on management and management incentives, reading every line of the proxy, right? But you might want to do that AI augmented, right? Go do a deep background check on the new CFO, get a 15-page, well-sourced, well-researched background check on the new CFO. You don't have time to do that dealing with the high velocity news flow. And so sort of what I think is that these tools can help fundamental analysts be more quantity, more fluent with data, but also the processes will start to blend. And I can implement traditional processes that other types of funds are deploying without needing the manpower to do that. I can do that AI augmented. I can always verify everything manually, right? I don't have to do 80 earnings previews. 1 or 2 cause issues, and then I go dig into those ahead of the prints. Andrew, would you add anything to that?
No, I think it's an important point worth mentioning that just tailoring the workflows and where AI slots in. There's different schools of thought. There's being AI first, and then there's being, looking at what you're doing based on your mandate, where you work, and saying, okay, where are the areas where I can eke out reliable productivity gains that allow me to either do deeper work or do something supplementary, or move things from the bucket of things I would like to do if I had unlimited resources and time, and things that are now made possible by having the augmentation of AI.
Brett, can I follow up on the AI gains will accrue to the people with the deepest pockets? My personal experience is so far that has not been true. And one of the reasons, just looking at our clients and people we work with, is people with really big pockets get really tempted to spend a lot of money building architecture and models from scratch.
Yeah.
And some of these bigger players, like that temptation is really big. Some of these bigger players don't necessarily have access to the technical expertise to compete in the AI space. If you think, maybe there's 1,000, 2,000 people in the world right now who can build a competitive LLM from scratch, how many of them are working in finance? That's not a ton. And if you get too attached to building your proprietary system, what happens when a new model comes out, a better architecture comes out, unless they're also building to adapt quickly. I've seen, at least one or two examples of things like that happening at places that had really big pockets and got really excited about AI, and ended up, having to backpedal a bit, and are now a little bit behind the curve.
Yeah.
Yeah.
I've had the same experience. Funds you would think from the outside, like, oh, they're nailing this, and then you talk to people internally and they're like, we're just using ChatGPT on our phone because our internal tool isn't
Yeah.
helpful. So yeah, and the buy versus build architecture, I think Zuck is bidding up the price of AI talent as well too. So I can't imagine trying to build your own AI team internally. But I definitely have noticed that there's a transition a bit more towards buy. Still, people are trying to figure out these compliance concerns around uploading my sensitive models. I'd say sort of one piece of advice we give to funds that want to start implementing this is start with an RMS, a research management system, and a number of the leading RMS vendors are doing a good job of creating, whether it's turning your model outputs into a Tableau, AI readable format, internal notes. Kind of step one is almost building your own Essential 8 dashboard with a research management system. Then the AI part of it seems like that's going to be a commodity. That's going to be the internet that we don't really think about, that's powering and distilling, but cleaning the data, and then ingesting the right tool via an API. That's probably sort of where the frontier feels like on enterprises now, is they're leading more on, okay, we'll do our own research management system, and then we'll pipe in an API from one of the finance tool models on top of that, and it's sort of this much simpler custom model. But David, have you sort of seen similar observations? Or anything else you've seen on
No,
that?
I think that's all spot on. Yeah. It's hard to build this yourself. There's definitely things you can, but I think the point that I've seen a number of funds build, and the issue is a year later there's a new model, and a lot of the scaffolding that was built is just now totally redundant and irrelevant. And I know a lot of funds have taken on doing alternative data analysis internally, and that's a very different beast, because that isn't software engineering. This is a little bit different. So I would definitely recommend it. I would agree with all the observations that you and Kris made on that.
Yeah. And there's a question that's kind of similar to that. How do these AI products compare to Google's Notebook LM, where you can deliberately upload the high quality data source documents, earnings calls, 10K? I love Notebook LM. I think it's fantastic. I also get so annoyed having to download the K's and Q's and transcripts and then re-upload it back up. And I'm sort of like at the point where I'm like, man, I'm spending so much time doing this. I'll pay $200 a month for a tool that has the documents sort of native. So I think that's a big part to me, is just the cumbersome nature of, especially when you start to get to high velocity workflows. I went back to 3:30 a.m. Arizona time, trying to go through 6 prints. Having to sort of download everything and re-upload it just doesn't really fit with the cadence of the cadence of how we need to react to things.
The other thing I'll just note on Notebook LM is the issue Kris was mentioning earlier around how the models will, if there's enough documents, it's going to do searches over the documents instead of reading all of them comprehensively. That very much exists in Notebook LM. Now, Gemini has a pretty long context window, so it doesn't happen right away. But where I've seen mistakes happen with Notebook LM is for the use case you probably want to do it for, right? Which is like load the last 5 years of every call, filing, piece of news. Like at that point, Notebook LM will end up missing things. Still very useful tool, very great general purpose tool, but that is one of the that is an instance where that issue will show up. But it is a very cool tool.
And we'll have the same problems with guidance and identification as well.
Yeah. Question from Robert Brammer, Fundamental Edge alum. Hello, Robert. I'm the CIO for a family office with positions in 150 equities across 25 portfolios. I don't use ChatGPT for investment decisions, but I use several research services and Bloomberg terminals for our operations. Some of the services use specialized small language models that have been helpful. Does Hudson Labs offer something unique relative to that? Bloomberg is, I'll let Kris answer that, obviously, and then Bloomberg is sort of a dark horse here. I mean, I think people have been waiting for Bloomberg GPT for a while. They obviously could sort of solve the essential 8 problem pretty quickly. The question is what they ultimately come out with, which I'm hearing sort of some murmurs of something positive. But Kris, how would sort of the Copilot tools be different than one of these terminals using a specialized language model? Or said another way, if Bloomberg comes out with something great, what does that do competitively to the Copilots of the world?
Great question. I mean, I've seen Bloomberg beta, which I think is coming out in September, October. And it obviously has access to a lot of data. It doesn't perform well on the multi-period precision issues, doesn't perform well on document selection, etc. So a lot of the same problems you'd see from a non-AI specialized team. I mean, I think we've been, since for a very long time, we've been the importance of having real AI expertise and being able to build proprietary architecture from scratch has been undervalued, and it continues to matter a lot. So we shall see. But I mean, right now, you can use AI to perform a whole ton of things that aren't easily accessible through a Bloomberg terminal. So for instance, if you want to create completely structured data from very unstructured information, let's say you want something's only discussed in a call, or it's discussed in a presentation one quarter and a call another quarter, that's something that you can achieve through Hudson Labs, not something that's supported through a terminal. Soft guidance identification, not something that's supported through a terminal. Generally, where we've tended to specialize are places where a terminal isn't able to provide the information you need, like identify themes across the earnings calls, etc. And I mean, it's hard to speculate about what exactly Bloomberg beta is going to look like. So I'm sure it will be easier to answer that question when it's actually here.
Yeah, the prior I use is like, Visible Alpha built a great business on just doing better consensus. Canalys built a great business on building usable models. And the question is, why didn't Bloomberg do that? It had the sort of, one would think the advantage starting position, and they just didn't. And I don't know if that's classic innovator's dilemma realities, or if that's, sort of established architecture around the core workflows that makes innovation harder. But I think we'll see. I think a lot of these sort of have to approach the future with humility, and maybe Bloomberg comes out with something great, and this course is not needed, and everyone just uses AI through Bloomberg. Maybe I don't know. We shall see. Question from Sandeep, also Fundamental Edge alum. Hello, Sandeep, of Factor Academy and Analyst Academy. So we're going to get you for the trifecta here. What are your general thoughts on linking APIs from? I think so. I think you're signed up. What are the general thoughts on linking APIs from industry-specific vendors or via MCP Claude FactSet to drive better workflow outputs? Kris or Dave, I will throw that one to you.
Kris, go for it.
Yeah. So we've been trying to get Hudson Labs to work via MCP, and it's annoying. So right now, I would say Claude Desktop has a lot of sort of annoyingness baked into it. That's a very much not eloquent. But when you try to pull data, Claude will summarize and change it in ways that are unnecessary. I think I'm very bullish on MCP. I think a lot of the MCP servers that are out there aren't great for our purposes in investment research yet. But theoretically, it's an excellent idea. David, do you have a different take on that?
No,
I find it impossible. Yeah.
Yeah, I think it's early days for MCPs. It's obviously super promising. It's great to have a protocol to build around. But yeah, I think it's the general spirit of the question of like linking to data sources. Yeah, I mean, for sure. I will say, we worked with a lot of data sources, including FactSet. There's, and I think this is part of the issue Bloomberg faces too. Like none of these legacy data systems were set up with the idea that a consumer would be a non-deterministic language model, right? So like FactSet suffers from this, Bloomberg as well. It's like the data is amazing, but the way they architected their backend and the schema and the data models that they use and the way all that is stored is like very much not AI friendly. So like an MCP is fantastic because in theory it should make that a lot easier, but you're just moving the problem of the obfuscation of that data to a different part of the chain. So it'll take some time to figure out, but like, yeah, I mean, for sure, incorporating the data that's easy to incorporate from those data sources it makes all the difference in the world.
Yeah, the problem that we often find is that you can get perfect data coming into the MCP and have Claude sort of ruin it as it's coming out to you, which can be quite annoying, whether it's FactSet data or any API. It doesn't have to be that way. There is a solution. Someone needs to build a better MCP that's more useful for finance.
Yeah, I thought this Claude Finance was interesting. Part of the reason it intrigued me is Thomas Lee from Delupa has been a speaker in the past. He'll be a speaker in the program. And what Delupa has done is they basically just focus almost singularly on getting really clean fundamental data, dealing with all the edge cases, adjustments, et cetera, and all the KPIs, all the stuff that Bloomberg FactSet haven't been able to do historically. And so he'll be a guest speaker in our program too, to sort of identify if we can tap into actually a high quality source of fundamental data, can we start to have these tools able to build actual Excel models? Right now, some of the Excel tools, if I say build me a model for Amazon, they're pulling numbers from sometimes Motley Fool or LinkedIn posts, which is, I don't know about you, but I don't like my models built on KPIs from a LinkedIn post from some random dude. So that's, I think, an intriguing frontier. And go back to like we're 20% now to 65, figuring those quantitative use cases like Excel would be a big big jump up in adoption. Maybe time for one more. We haven't had one live. I see Warren has raised his hand. So Warren, I'm going to put you on the spot. You're on the hot seat. Shoot away.
Yeah, just want to kind of ask about the best practice for processing conflicting information. Um, yeah, what's kind of the best practice there?
Can you elaborate what you mean by conflicting information? Like, what's an example?
I mean, there, might be, some piece of information that says one thing and not, and another that says another. Um, like how does LLM process things like that in general? And as a user, what's the best way to, get the most out of the tool?
Yeah, it's interesting. I mean, I think the one thing I would say, so two thoughts. One is one of the issues with LLM is that they're often, especially the general purpose models, is they're quite gullible, and they don't necessarily do a great job knowing which data source is credible versus not. It will sometimes weight a Reddit post at the same level as like a company press release. I definitely think it's a real issue. And we'll talk about this a little bit in the prompt engineering webinar and in the class, but I think there are ways you can go about prompting these systems to kind of avoid that. One is within a prompt is to actually define somewhere in the guideline section of a prompt, like these are the data, here's the weight you should be putting on data sources, right? Like company primary documents, that always takes precedence. Then after that, news. Then after that, general web. Second piece is as part of the prompt, you can also ask the model to call that out. So it is, you could say, if there are discrepancies in data sources, please note this. I think of it a little bit like for a situation like this, it's a lot of the same way, and we'll talk about more about this, but like how would you ask an analyst working for you to handle conflicts of information? It's basically the same thing. You would tell them which data sources that should be weighted more than others, and also to identify those conflicts and which data that it's deciding to go with to state that. So those are some of the things. And I guess the last thing, of course, would be to use a platform like Hudson Labs or Portrait, where like that, where our systems are kind of managing that on your behalf, and making sure that the highest quality data is being used for that. But that's maybe how I would think about that.
One super
And
quick,
just
sorry.
Oh, sorry. Yeah, go ahead, please.
Quick follow-up. If you are looking to find conflicting information within a source document, general purpose models are pretty good at identifying that. So if you can ask, is there conflicting information? And a general purpose model will do a relatively good job for a single source document.
Mhm. Okay. And just one quick follow-up, like, would you guys have any ideas or like kind of thoughts about email workflows? Like, how we can kind of summarize and make it through the emails, from different brokers, things like that, more easily. Any thoughts?
Quick thoughts on this.
Yeah.
You can, it depends what your compliance system is like, but it is one of the things that we're helping customers do right now is set up no-code integrations where you search for your email for filters and serve that to a model. Could be any model. We use the co-analyst, obviously, to provide summaries of specific topics. Those things are relatively easy to set up if you are interested in using no-code integrations. We will be doing a webinar at some point on setting up automations in your workflow. I have an AI tool for my email. It doesn't do a lot of summarization, but it does help with my workflow. David, maybe you have something more to the point here?
No, I think that's right. Like I think you basically there are tools that are great at connecting into email. I think it sounds like Hudson Labs is a great one. I know on other platforms there's ways to build. So there's two things you can do. Like you can either be searching over your inbox, right? And increasingly, like I imagine the email client providers will make that easier and easier. And then two, you could like there are some people who will do like kind of bulk actions with emails where they'll say, okay, every time I get a broker note, just summarize and send it to me. And those, I don't think there's anything amazing off the shelf for that today. I think you can probably, if you want to hack something together, can put together an integration. But would definitely recommend checking out like a paid solution for that to make sure that it's compliant and does a good job.
All right. Well, we did almost a 2-hour poke. If anyone has any ideas on how to help me win my fantasy football draft that starts in 36 minutes with AI, email me, Brett@FundamentEdge, because I have done no preparation. The draft starts in 36 minutes, so I have to go home, get my setup going for that. Yeah, I hope this was helpful. I think part of what this would be like kind of a lot easier if there were just like right answers on anything. So I felt like we said, gave a lot of like hedging and complexity around this. The reality is this is a complex thing. The more I've dug in, the more I've seen this complexity, sort of simple beliefs like, hey, I can just search through these 50 documents. It becomes a little bit more complicated in practice. I think my view is part of all this complexity is manifesting in too much, which is why a lot of these pilots are failing per the MIT study. Our sort of goal is to help help hold your hand through this as a team and sort of help you see through the fog and develop a system that's effective for you. Because I'm starting to see snippets of like, damn, this is really helpful. This is really good. But it's not that easy off the shelf right now. It requires sort of this foundational understanding of what these tools are good at and what they're not good at, the tool selection, and then thinking thoughtfully about workflows and augmenting your own process in a way that sort of meets your cultural requirements for verification and accuracy. So we'll continue to do that. We always, obviously, we're running a program which I dropped into the course where you can register and a 10% discount code for joining. But we'll also try and do that publicly too. I mean, we've been trying to do that on Twitter, and we will come back in 2 weeks and give you some ideas on prompting. So we'll do the best we can. I think it's a really fun space. It's fun to learn, and it's fun to Dave, Kris, and Andrew work with you on trying to get smarter on this area. I don't think any of us have the answers, but collectively, I think at the end of the program, we'll have a lot more answers than we do now. So, any last thoughts from anyone? Peyton Manning, is he still playing first pick? Oh no, he's retired. Okay, I gotta go. I gotta get up to speed. Arch Manning? No, he's still in college. Okay.
You want
Sandy says footballguys.com. Okay, I got you, Sandy. Thank you. All right. Thanks, everyone. We'll see you in 2 weeks for those of you who want to join the next webinar.
See you.